Hi, Matt. Glad to be back here again, and just a little bit to start the ball rolling. As you know, I'm managing director of DYL. It's a advanced explorer developer company, mainly only in uranium, and at this stage only in Africa, specifically in Namibia. And we've been working since 5 years and have really been hugely successful developing one project which we increased the resource by 4 times. Looks like it's going to be a 30-year plus deposit out there, and we are now exploring our second, which will give us a, would you believe, a pipeline in country where we'll have options. So it's done very well. The country we're in is I believe, ideal for what we need and for the times, and that's Deep Yellow.
John, good to see you. It's been a while. I haven't seen you since September. A lot has changed in the world. But we're going to talk today in a roundabout way about Deep Yellow, but we're going to talk about Africa, because I'm hearing Africa's uninvestable, John.
Well, I often hear about that, and when you look at what's happening and what's happening in Africa, what's happening in other countries, that there's so much upside in Africa. I think in particular commodities, it's really shown that it's competing extremely well against other countries, and I think it's an untapped region. I think the attitudes are right. There's countries that some are better, some are worse, but it's a great continent to be in, and I would dispute that saying. It's only for the unthinking, I think, that say off the top of their head, oh well, this is no good, and away they go to whatever their favourite sort of bandwagon is.
Yeah, I mean, where that comes from, I think there's a sort of debate between North American uranium equities versus African uranium equities. Obviously, the North Americans, well, certainly Canada benefits from much higher grades, which I think the proposition being told there is that makes them much better investments, right? Whereas African plays much lower grades. So again, for the uninitiated, what would you say to that?
So what I would say is that grade, yes, people say, oh, that's grade is king and all of that, but I don't think it's only that. And I had a great meeting once with the Cameco chief, and came up to Langer Heinrich, and he says, I can't work out how you guys working a 600 ppm deposit have made this into a tier 1 group, a tier 1 project operation. And here's us dealing in 10% pitch blende, and all of our people are frightened to take anything less. And yet, there are opportunities that are the same, even though it's 10% grade, that's still costing about 15 to 20 $20 a pound to produce. Our sort of 600 ppm is costing about $27. So there's not an order of magnitude difference in terms of operating costs as what the grade would suggest. So then what becomes more important is, how can you realise the dream of an operation? How supportive countries are. So I don't think grade is the only issue. And look, I will say it only this way for uranium. During the last uranium boom, which was the China-inspired boom in which Paladin developed what it did, in terms of conventional deposits in that boom time, only Africa developed 2 modern uranium conventional mines, and basically the US sat on its haunches with existing known ISR deposits, and out of Canada, it was only the development of Cigar Lake which happened, and nothing else happened. So all of the juniors there that had deposits could not convert them into operations, whereas in Africa you could. There's no way a mid-sized company in Canada will make a mining operation, and all they can do is hang on the skirts of Oranos and Camecos and go on their conveyor belt. Apart from NextGen, which is a real standalone type project. So already Africa is showing a difference and a separation in terms of opportunity that no other country has shown in the uranium sector.
So if I think about that conversation that I hear a lot, which is high grade is grade is king. Maybe we should liken it to, I guess, gold, where there are large bulk gold. So low grade bulk projects like Equinox, $2.5 billion company. So I think that's probably the way to think about it. But let's move into the kind of the country component of that argument, which is like it's just difficult to do business in Africa. We've heard that, we've seen headlines like, oh, there are AK-47 countries. We've seen conversations like they don't want international inward investment in the countries. There's black empowerment. There's all sorts of problems which companies like yourselves have to come up against, and you got to work out how you deal with it.
I think we're dealing in terms of in Namibia, and I would suggest quite a few other countries, that we know the platform we're dealing with. We know the how keen the governments are for development. They understand if you've got a mining economy, you need to invest in exploration, new deposits, and they become your future mines. And it's the only way you're going to have a sustainable industry. So when you have a country that is let's say since 2000, which is now nearly 20 years, 25 years of uranium production, and it's essentially had a fairly stable environment in terms of royalties, in terms of BEE, and there is some acknowledgement that there has to be a bit of a sharing, like it is in Northern Africa. It's 5, 10% pay your way. That is not for me a detriment in the modern era, and it certainly is a responsibility, no more so than the Inuits in Canada, and where they are demanding some share if they with their sort of First Nation rights or whatever it might be. So in terms of regulation, in terms of the clarity of the working scene, in terms of a really clear environmental sort of footpath that we have, the Namibia can match it with any other country. In fact, better. And the whole thing is that you can do something in a shorter time frame without compromising the regulatory environment. And there's many utilities, for instance, that want product out of Africa for diversity of supply, and because there's when you look at Canada, the amount of uranium is just coming from a few orifices, and one of those has to shut down, and you've got a supply issue. So you need somewhere else. So you've got Kazakhstan, of course. Kazakhstan, the whole picture of the security of supply, it changes a little bit. It's still probably okay, but it means that Africa is an integral part of the supply security for nuclear that has to be sort of acknowledged. And on that side, Namibia and Niger, as being one of the two uranium mining countries in historical sense, are very important sort of strategically, and will be supported by consumers.
Supply. Let's talk about supply, because it's really interesting dynamic at the moment, because I think we say on our weekly energy show, we talk about the uranium supply demand fundamentals a lot, and what people are doing. starting position for us is we need all of the above, right? We need all of the above. So North American, African, Kazakh, we need all of the above. So it's not a competition between each other, guys. It's we need all of the above. It's a question of the sequencing in terms of which projects come online first, right? And it feels to me like the African place will come online sooner because they're one significantly advanced in terms of the study process, but they don't have these long licensing issues and permitting issues that we're sort of seeing in North America. Well, hopefully they will come online, but it ain't going to happen anytime soon. So is that reading correct?
Yes, absolutely. So and it happens because there's a clarity in these countries that they need their economies to move, and they're thinking not in the sort of fat cat sort of Western world way. We can afford to delay this. There's regulations there, and it goes into I think absolutely you need regulation, but everybody knows that it goes into absurdities, and those absurdities, which are, by the way, going to affect nickel supply, copper supply, lithium, you name it. This is not peculiar to uranium. And if anything is going to sort of damage supply, it's going to be the regulatory framework, apart from the geopolitical issues that come out. And Africa, those countries that have got their act together, that understand and appreciate, match any other country hit for hit and are better. And so much better that I believe taking a uranium operation in an arid country environmentally is 100 times better and more effective than mining operations underwater, which is what Canada is. In terms of the difficulties, the technical difficulties, how do you in a subaqueous environment have tailings dams and all of this? Yes, you can do it, but it takes a huge amount more expensive, and then people don't put those expenses up against. Yes, it's better grade, but there are other overheads there that you need to take into account. That most of these people that are pushing the Athabasca theme haven't got a bloody clue. Which is the operator? Which is the ones that are going to come in next? Where are the ones that have come in of all of the dozens and dozens of companies? How is that going to express in a uranium mine that is not tethered to Cameco or Orano and using their infrastructures? And so there are difficulties in what a uranium company and what you're investing in will achieve and what it will become. And yes, you'll get a big payout, and all of those big, the big sort of buyouts that used to happen in the halcyon days when Rio bought whatever it was, Rough Rider or whatever, they're gone now. The big companies aren't in that sort of mood anymore, and they're not much around. And so basically you've got to either stand alone, and it depends what the investor wants or the management and the boards want. To be a producer and to grow and to be part of a highly rewarding, ongoing company to your shareholders is what I believe, what I want. Some of the others, they might want it, hump and pump and get it up there and off you go. And are they going to produce anything? Oh, who cares? Let it move on. And that's a different type of investment strategy.
It's a different game. That is a different game, and some people like to play that, and that's down to them. I think I just want to stick with fundamentals. I want to understand the companies that are actually going to get into production. It reduce the risk component for us of trying to work out how to time that game. So just on this, there's a lot to talk about. So you mentioned Kazakhstan there, and obviously we've got the kind of Ukraine-Russia situation at the moment, and it looks like we saw an announcement this morning about Russia doing a deal with China to ship their gas east. That could be interesting for Europe. You're perhaps dependent on it at the moment. Do you think we would or could expect to see Russia put pressure on Kazatomprom in Kazakhstan and ship their uranium east?
Well, it could. I mean, already Kazatomprom is sort of sitting there as a hub for China and a hub for partially for India and Russia. Essentially, one could say, how sycophantic Kazakhstan is to Russia is, debatable. You can make up your own mind on that and who's pulling their strings. But Kazakhstan, will start providing probably more product to China. But I think even those countries will require some diversity, and of course America. I mean, there's a lot of stuff going through to particularly in the enriched category. And it's not just the yellow cake and how that. So there's a big reshuffle of this game, and how long term this will be something that will be watched by many interested parties. But that there is a happening here in early days, and how that will mean that there will be diversity, real diversity in terms of investing in other areas to recalibrate the diversity. For instance, the utilities must get from diversified sources, and it's defined by percentages. So they need 20% from this region and 20% from there, and they protect their supply, and that's how well thought out nuclear is. Unlike gas, where they all bloody well sat on the gravy train and thinking, all this Russian gas coming through, and they've now landed in a situation where there's huge turmoil in terms of getting things to some sort of stable form, which probably will take 5-10 years. And one never knows. Africa, again, with all of its little supposed problems, becomes insignificant, those problems, to supply. I was saying to somebody that the security of energy marginalises even climate change. That's how important it is. That's how governments survive, by security of energy, the sources and all of these. And you've got a 50, 60-year climate change problem, or I've got to survive my bloody government in 3 years, and it's energy, and that's where I'm going to get voted out, as my lift stops halfway up and I can't get out of it, and all of these sort of things. So they're the exciting things that are happening.
Actually, that's a really interesting thought about energy security marginalising climate change. I mean, I think Greta Thunberg's gone about quite recently, don't you, John? But it's a really big issue. Certainly here in Europe, I don't know what's happening over there in Australia, but we're certainly seeing prices rise across the board, and obviously the recent events will. Well, I guess the knock-on effects will be evident soon enough. But this brings into question some of the other things which. Or not just on energy, but across the board more broadly, we've seen COVID driving costs up. We will see this energy situation with Russia driving costs up, which is, I guess, obvious. But the other thing it's going to do is make people think just that little bit harder about jurisdictional risk, which comes back to something. I want to bring it back to the Africa component, right? In terms of, again, commentary about, being able to do business in Africa, the jurisdictional risk is obviously of a concern enough that people are talking about it. But what's the reality on the ground? I mean, how long have you been working in Africa for a start? Let's start with that.
So, basically since 2002. And in fact, before that, since 1980s, late 80s. And look, with Paladin, we were the only ones of the uranium miners in the junior categories that built new mines and got them going, got them to their design sort of rates in tough old Africa. in two countries, and one country which never had uranium mining, any mining history, and we had to sort of teach them along the way and how this could be done, which is now the Lotus asset they have. But tell me where else that could have happened. And we are clear evidence of the investability in Africa. And you'll find such things happen in gold, in lithium, in copper, right throughout. And it's yet to happen even more, because it is it's opening up. Yes, there is some noise. Yes, in some countries there's some civil unrest, but it is not like what people think. And once you go out to these countries, they are quite workable. Some of them not. I'm not saying they aren't, but it's a mosaic out there, and 55 countries or whatever, and you can say, right, 40, 30 of those countries are workable. But Africa is so full of fortune that those 30 countries that are workable offer potential far greater than what exists in countries that have been mined for one century or 2 centuries. So everything comes to itself. So Africa is a great country, and there is no other uranium group that can say, oh look, I've done well with a producer out of North America. I'm talking about Canada. And the littlies in the US are a different story. They're more delicatessen style little producers, and you need corner stores everywhere. But the bigger ones, they're going to come out of the sort of the Canadas and the Africas, no question. And of course Kazakhstan.
I mean, this interesting point you raised with regards, the US projects are, in terms of their ability, or what they're telling the market their ability to produce is, they're kind of smaller numbers for sure, but they do really get the valuations, don't they? I mean, why do you think that is? You look at the market cap compared to some of the Namibian plays, it's stunning, really.
And I'm sure there's good sort of finance people around, and they can just add up and say, oh look, if I had a project that was going to develop £800,000 a year, and my market cap is $1 billion, what price do I have to have per pound uranium to make my market cap be, and the NPV to be anything new? I'm talking $80, $90 a pound. So it's quite easy to sort of work these things out, and just on a back of an envelope to say this is hype or this is value against project value, and that there is a marry up between market cap and outcome at a certain uranium price. So when they then start saying, oh, I'm going to do it at $40 or $55, $45, and they're sort of talking about what's doable, but not talking about what is accretive to their market cap, and how that value is going to be maintained. And so these valuations that are occurring, I think they create their own monster in a way. It's great to have a company with a high market cap, but you've got to deliver on it as well, unless you're part of the people that will offload and leave that responsibility to other people. And they're the areas. It's all well and good, analysts making recommendations and all of those sort of things, which is sort of seems to be done in North America a bit more than elsewhere. That's why I think the Australian stocks are more realistically valued, if you like, and you can do a comparison. You just have to do a statistical analysis on it, and if you say, oh, if the North American market valuation is the norm, well, then you say there's huge accretive value in the Australian stocks, because they will get to that, because in the end they're selling the same product. But so yes, there is these regional type differentiation, and maybe a little bit in Africa. But Global Atomics is valuing well. It's in Africa, and it's sort of, people can say, oh yeah, well, okay, that's one of them. I think for the level of development we're at, I think it's doing well. I want to get to where I think our market valuation is going to be, but I need to get projects and line up where that can be seen as a true sort of reality and sustainability and reward. So yes, I think in this.
Sorry, John. I just want to just talk to me about price discovery, because I think you have said to me in the past that the real movement in price will be 2023, 2024, as of the trade bodies, right? They've said that. However, you're definitely wrong, because the Twitter world says it's going to be a lot sooner than that, and it's going to be $200 by the end of last year, end of this year, whatever kind of tickles the fancy. And even a few CEOs have been caught out by calling, $80, $100 uranium by the end of last year, and it's kind of like a fool's game in a way, trying to guess the price of uranium. And I think we've had lots of conversations, lots of industry experts for the last 3 years on uranium. It's a toughie. But has your mind changed? Are you seeing anything different with regards to timing? Because there's been some pretty spectacular events or catalysts, I think the market like to call it, since we first started talking.
Yes, so no, I haven't actually. I've seen some darn good indicators that are going to reinforce the belief that uranium will go to where it's going in late this year, mid next year, and you've had and all of these things that everybody's sort of preempting too soon. Not that they're not important, but it doesn't just happen there. Maybe this Russian move and what it's doing will have an effect. I believe this jump in uranium equities that is happening now. I think in about a month's time you'll find it easing back again, because what is happening is that with all of this, you're still having the utilities in some sort of torpor. They're not really reacting, and they're trying to be clever. They're trying to still exploit the producer by putting clever little contracts in and saying, oh yeah, we'll give you a bit of this and half a bit of that and all of this. And they miss the whole point, that you're looking down the barrel of shortage, and you're looking down the barrel of, you've got to secure relationships with producers that will put your reactor on a long-term supply. So that takes quite a while for the sput sort of tickling at down at the bottom, and picking up stock and driving it from a market that's only probably 5% of the total market of uranium, and what they're trying to do is catalyze the other 90%, and how that's going to be bought, and that's where the real money is. So, and you're finding that, and I've said before that until when these ETFs or whatever they're called, when they stop buying, the price comes down. And that means that the true sort of impact of what people like Spud are trying to do hasn't yet hit these people. They're still complacent. They still think and believe in some sort of fairy tale that all of these juniors are saying, oh, I'm going to bring in £7 million. Well, where's the Berkeleys that said that they were going to do that? Where's the Greenlands that said they were going to do something? And, where's the Plateau Uranium that said they were going to do something, and now they're in lithium? I'm not being critical here. I'm just saying these things are sort of realities, but what The promises are what can be delivered. What the reality is what can be delivered, which even the Camicos and the Oranos are trying to tell people, look, it's a tough game, boys, and you can't sort of promise cheap capex, cheap this, and then deliver all these things, and historically none of them have done it. So that's where the consumer is still believing a little bit the hype, and they have yet to sort of come back in unison and say, look, I'm going to do what I believe. I think there is a shortage coming up post 2024, and by gum, I'm going to lock in uranium for that period to 2030. And I believe what my consensus is. I'm not listening to UXC, and I'm not listening to these people that are sort of trying to ride the pony with from two sides, 1 foot on each saddle, and that's when the true energy in the supply market will happen. And that will happen then when these people realise that, and they're going to say, by gum, who are going to be the builders? Where are they going to be the builders? Where I need it sooner than 2030. Oh, hell, Africa's a good place. I can get it from there. And security of supply in energy overrides everything. And that's where I think there's got to be a context to all of the considerations, and it's not just a single answer to say, oh yeah, it was the war that did it. And sometimes a war can do it, but then looking back, spot this, that, all of these things count in terms of how the rope is tightening and everything is coming to that eventuality.
I think it's interesting what you say, that the effects split has had emotionally in the marketplace. We saw all equities, and uranium equities had a bump, back when it was like August, September-ish, and they've all kind of come off again, because SPUT can operate and raise money under certain circumstances, and they have been buying in the market, but as a percentage of what's out there, it's more than has gone before, but it's not enough to move the dial, and that does seem to the price does seem to come off, and SPUT's not buying. And the interesting thing, I think you nailed it, because you look at all of these individual moments that people had great expectations on. This is going to move the market, whether it be Section 232, Russian security agreement. We've got, SPUT coming in. We've now got maybe the possibility of Russia influencing what Kazatomprom does or doesn't do. And we all hope and wish that these moments will be the deciding moment which drives the stock price up. If you look on social media, it's full of it. It's full of it. Always has been, hoping that they can buck the market realities. They can buck the numbers. So you feel that it'll be all of these things cumulatively, which will do a job and work its way through. But you're still holding fast on 2023, 2024. So you said end of this year, potentially beginning of into next year, right? Okay. Yeah. Okay. That feels a bit more real.
That means, that means Namibia can deliver product by late 24, early 25. Tell me any other country on a conventional mine that can deliver 3 million to 4 million pound per annum in that time frame, where you've got everything right, all of your ducks are in a row, and all you're waiting for is incentive pricing, and away. And yes, there are other issues now, supply chain issues, where capex is going, and factories aren't working, and all of that are going to put another dimension on supply, and which will really exacerbate supply issues. So you've got that. You've got Vattenfall that announced 3 days ago that they've stopped purchasing out of Russia, and now they've got to look at supply elsewhere. You've got the famous Germans who have been going non this, non that, and all of a sudden, as of yesterday, one of the guys over there, he was the economics minister, saying we are looking at everything, and we are looking at even delaying shutdown of the nuclear reactors to beyond 2030. Well, hallelujah. And now they've realised that, you know, their sort of gas thing is out of change. These are sort of all going to add on to the pile of how things are going to go and where they're going to do and how they'll translate. And presumably the zero emission goals are still there, although they've been sort of put on the side at the moment. Let's focus on what's happening. But they will be there. You know, COP27, whatever it'll be, will come in and they're going to promise everything, and then they'll be disappointed because nobody, you know, not everybody was signed. I'm not being cynical. I think climate, responsibility is important, but it's important as well that you can't just survive on that mechanics and not have electricity or security of where you're going. We're in an energy crisis. There's no question about it. At every level, it's made and it's tortured even more by global sort of climate change and all these wokey investors say, oh, no, we're going to bloody not invest in fossil fuel and not in this and that. So what happens is the Essos of the world, the BPs and the Shells are too gutless to invest and find new oil fields, and you're going to have big vacuums because they're investing today on what they have to invest in post 2050 when the projections and these wokey institutions allow them to say, well, you've got to have some. We agree that there's got to be some oil, but what happens between now and then?
Yeah, I think there's some real issues out there. I think the other thing the Germans have announced is the fact that they're going to extend the date for the closure of the coal power stations, stations. And it's sort of interesting. You know, you mentioned earlier on about the kind of the ESG kind of component to all of this, and I did want to come back to it. But you know, so Germany's now saying we're going to continue to use coal because we need to solve a problem today. This is the same government that has been telling China, India, and others to shut their coal-fired power stations down because it didn't suit their needs. As in, we in the West don't like coal, therefore you must shut yours down. But when it suits them or when needs must, we're going to just extend our own situation, because this vacuum, this kind of vacuum between where we are today and what we've got in place today, renewables, if that's the way forward, or re-nuclear, you know, we can't just suddenly go and build additional reactors overnight. It doesn't happen like that. And there's got to be this transfer of energy. For, as you say, maybe it's a 10-year, 15-year time frame before migrating over. So yeah, I think Germany's been quite unrealistic, I suspect. But the Russia Nord Stream 2 not coming through and Nord Stream 1 possibly being switched off, energy security, I agree with you 100%, a real big deal. Can I just, because I'm just conscious of your time, John, is you mentioned ESG, and you I know you weren't being disdainful of it in itself, because you went on to explain how you operate in country and what you need to do. Are you disdainful of the badge or the rebadging of what companies have always had to do if you want to operate successfully in country, i.e. this, whether you want to call it greenwashing or what? I mean, what do you feel, or what do you see when you're speaking to funds or investors more broadly on that topic?
So basically, what is sort of happening, and I don't mind ESG at all. I mean, being in the sort of uranium business, we've had to uphold some of those ESG values way before they became fashionable, because of stakeholder issues, sensitivities, and the whole industry built around how you try to, support and get things where most other commodities didn't have these worries, so they just plowed on in traditional ground. So the ESG side and those responsibilities are clear. What is the difficulty, and where I think that there needs to be genuine debate, is the way in which you transition and the way in which a society goes into the fifth or sixth industrial revolution that's going to be probably more dramatic than all the others, and how you can't change in 5 years, as some people expect. And so that there is some latitude necessary in how investments are allowed, it's actually coming to that. And so nobody can invest in coal and it's probably many others, or oil, and yet there is an interim need to invest in that, to make sure there's sufficient supply of material that'll be needed, absolutely, while we're going from A to B, wherever that is in the time frame. And that's the only reason I'm a little bit not skeptical, in the sense that it won't create the results it's needed, and it's aggravating in the sense that it's stopping people. They think, oh, just because I stop something, the need for it stops. Well, that's not the case. You can only look at, thermal coal, and if there's not sort of embarrassment on people's faces in terms of thermal coal and where that is at now, and it's not just a 2022 phenomena, winter Europe issue, it'll happen again the next year, because this is fundamentally, structurally built into the problem of the whole supply, the whole technology transfer from technology A to make electricity to technology B, and all of this is, to say, well, look, the low density renewable electricity that goes into the market is not a powerful technology that it can plough in huge amounts of kilowatts into the system as nuclear can do, and even gas or coal. And so you've got a problem that people are too eager, and the most eager ones are bloody politicians who think they can just satisfy, the weakest link in the chain and say, oh, no, we're going to do it by the end of whatever year. And it's not possible. It's a blatant lie. So, and that's where you confuse, what is needed, and to be as strong on the ultimate end of what you're trying to achieve in terms of emission management. And emission management isn't, you might need a bit of sort of, an electric prod to kick you into, starting to be responsible like that, but not by eliminating investment at a stage where some companies now will make fortunes out of coal, because they'll continue with those assets. They won't develop any new assets because they can't, but they're going to make more and more and more money for their shareholders, because that product is going to get more expensive as it gets shorter. It's not going to be they're going to stop producing electricity with coal without coal. It will happen, and so they really don't fit the practicality of how you move from A to B, and that's where I think the debate should be. Not whether you should invest today and this is I want it for my grandchild, blah-de, 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 blah. And like she said, well, I can say as many blah-de, blahs from my side as she can say, the 15-year-old can say from her side.
Well, I think that's true. With the price of energy as it's been going globally, right? It has been increasing. We talked obviously, China announced, was it 4 or 5 months ago, the investment of $400 billion to build another 45 or so reactors in China, but it's still not enough. We talk about it in one of our shows called Undesirables with Fergus Cullen, and you're saying that the coal-powered fire stations are going to be required for at least another 20, possibly 30 years in China. They're not going away. It's just as well. So nuclear will obviously help significantly, but it's some of these older technologies are going to have to be used for some considerable time. Otherwise, people are going to be paying 10 times the amount for their energy. And that gets to the point where it's prohibitive. It's unrealistic as well. So again, I keep saying I promise I'm going to end this interview, but I love the topics. Are you at all nervous about where all this is going in terms of activist investors and the way that fund managers are sort of rebranding ESG, as a critical component to investing in projects? When you see what's happening in Canada with regards to permitting, First Nation issues, we're seeing what's happening down in South America. We've had projects taken back by Mexican governments. You've seen, Chile, Peru, Ecuador. These politicians talking a good game about hiking up royalties and taxes on foreign direct investment into country for the producers. It's just all feels disconnected with the realities of, as you say, the metals that we need to secure our future, whether it be, for energy or EV or other things. Do you think they're kind of going to get in the way of themselves if they keep talking like that?
They do. But I think that, that you get these sort of movements, and for me, all I look at it is they make supply shortage. That's what they do. If you damage the industry, you don't get the investment. There's less copper produced, and whatever. There is always people say, how do you cut this cake? Is it got to be a share of, 48% to government, 52% to the company, or how much on the margin is the fair deal? And those arguments will happen. But I think that when you look at, I think the biggest security that we have in Namibia, to tell you the truth, is to have big brothers like two big operations owned by the Chinese. Hey, how about that? And who's gonna tickle their bloody testicles? Nobody. And so, in a way, in an ironical way, that adds stability. You know what I mean? Because there is a big investment there. These groups are investing in other things in countries. So there's a buffer there, if you like, that means that taxes, nationalisation, which is not even thought about, and all of those sort of things are a little bit less free than they would be normally in Chile. I don't know, but I feel very comfortable where things are in Namibia. I feel very comfortable. Even Niger, where this country has been tortured with civil unrest, and there's still an industry operating. It's bloody remarkable. When I was in Vietnam, I couldn't work out how Michelin rubber plantation was working while we were bloody well there doing our fun and game. I couldn't work it out. Then I realised that the owner was selling product to two sides, and they were safe as houses. Nobody actually touched them. So these coexisting things are very strange, and people can't understand it at the first instance. How they happen, what it means to survive without any like your guy on the pipeline. All of a sudden somebody's taken their tax out of the pipeline, and things survive and are sustainable. So Africa is good. Even Niger, you've got all of these hassles. There's mining operations going on there. There's a new one about to start, or hoping to start, and I believe they'll meet their target.
Yeah, I think it's funny you say that. So I think also during in the 70s, the Israeli the war in Lebanon, basically,
yes.
Both sides agreed that there should be no fighting anywhere near the vineyards, and I think that's a very civil thing to have agreed. Everyone was the winner.
What I mean.
Yeah.
There's a rationale there.
Yeah. Look, John, I better wrap it up there. I've taken so much of your time. As always, truly fascinating, truly entertaining, brilliant insights. a few big takeaways there for me. I'm really going to dig down on some of those. Look, maybe come back on and tell us how things are getting on at Deep Yellow. Obviously, with the DFS like it is, I think you're looking to move the other projects along too. So look, we'll reach out to you and perhaps organise for you to come back on. Appreciate your time.
I'd love to. Thanks very much, Matt. Cheers, Matt.